Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, dear golden bucks. It's time again to take a look at the gold market. So, as usual, prepared report. We agreed last time that the Japan now stands also now in focus because the actual events develops there really fast, shows very fast progress, and things that we saw this week just confirmed that, and actually Japan slowly but stubbornly is moving to the default. In what way this default will be hard? It will be just pure default. Most probable that will be covered by the massive quantitative easing and jumping on the inflation that's already spinning up in Japan. But definitely the Japan is becoming in focus for everyone who are interested with the gold market. The problems in the United States are known, but their beats it's a bit longer term, and they have a bit more safety margin compared to the Japan government, who have 230% of the debt to gross domestic product ratio rising inflation, which is limits the ability of the government to cut the rate and to save some money on payment on the debt. So they are actually in some dead way, and situation is showing the progress really fast. Besides, historically, the Japanese banks have a very low capital, so 3.5% in relation to the assets. It means that if bonds will collapse a bit more, for 10, 15, 20% maybe, the banks start collapsing in Japan. It might be the start of the overall collapse spiral, which is definitely will bring the chaos in a global economy. So that's why Japan now is really maybe not the number one point in our view, but definitely number two. Second, we also have covered a few issues that were not covered widely by the mass media. Also, I would like to input in this report some parts of the big report by the Incrementum. So Incrementum is a big gold fund which prepared really great updates and reports on the gold market. But in this case, it will be too big reports, so I decided to postpone it on the next week. So next week, I will make some extractions from this report and share with you with the really great analysis. Also, I put this report in the Telegram channel, so if you'd like to read it by yourself, you could do this. It's really big, so it's about 400 and more pages, so 450, 500 pages. But you could read just some great actual content, so you could just choose what you would like to read. I will try to read this and put most interesting stuff, what is actually interesting from the practical point of view, in the next report in our analysis. Now let's take a look at the short-term picture. So first of all, I would like to congratulate you because on the weekly chart, we've got another grabber. And this grabber is confirmed by the futures chart. So you can see that on the futures, we have the same grabber. This is great because this makes a very simple task to find the point for the entry. Those of you who missed entry on the first grabber that we discussed actually 2 weeks ago, now have another chance to do this, and with a small risk. This grabber brings nothing new compared to the target, so the target still stands, minimum target at least, stands around the stop, but it makes much simpler the process of the entry. Finally, if you take a look at the daily chart, you could see that additional to the Thursday grabber, we've got the Friday grabber. So now we have the two grabbers in a row. So first grabber we already mentioned, now we've got another one. And this is also confirmed on the futures charts, not only on a retail broker chart. What actually this gives us? So if we take a look at the hourly chart, we have considered this hand and shoulders pattern, if you remember. And we said that you could watch for this confluence area. So initially we thought about this hand and shoulders ABC target. This has been completed the first entry with the first grabber. Now we have the second grabber. And take a look, we're standing at the bottom of the right arm here. So as you understand, the grabbers, hand and shoulders, and downside breakout to this level are mutually exclusive. So if market drops and raises the grabbers, it suggests that, well, deep retracement might happen, or I don't know, maybe even big downside retracement could start. So for the short-term purposes, we're based our analysis and practical work only on these two patterns and a hand shoulders pattern. And you can see that situation stands so that here's potential, in fact, the moment where you have to make the decision. Because market stands at the culmination point. It has to start moving up right from here, following grabbers and hand shoulders, or it will not start upward action until dropping below the confidence, erasing first grabber, dropping below the head, raising the second grabber, and so on. So maybe we will consider later 32.14, 618 support, and so on. But since we have the grabbers, directional patterns, both are valid, now we are not considering the 618 retracement because they contradicts the idea of the patterns that we have on the daily chart. So now, in the beginning of the week, on Monday, Tuesday, we will be focused on this one. And if you would like to take this position, so that's the point where you have to make the decision. So that ends towards what we have here. Think, decide.